Okay, so uh, Unit 4, Lesson 2 is we're going to focus on savings tools. So only 8% of the world's currency is in physical money. But don't worry, the digital dollars in your checking and savings account are as real as the cash in your pocket. The right savings account can help you make the most of your hard earned savings. Compare savings accounts side by side to find the right one. Depository institutions offer numerous ways to save. The different types are checking accounts, savings accounts, money market accounts, and certificates of deposit. Each of the savings tools differ in terms of liquidity and interest. Your choice of savings tools will be determined by how quickly you can turn your money into cash, the liquidity of it, and the interest earned. So checking accounts, a checking account is a depository account held at a financial institution that allows withdrawals and deposits. Also called demand accounts or transactional accounts. Checking accounts are very liquid, which means it can be converted into actual cash very easily and can be accessed using checks, automated teller machines, and electronic debits, among other methods. A checking account differs from other bank accounts in that it often allows for numerous withdrawals and unlimited deposits. There are high-yield checking accounts that offer better interest rates than savings accounts. Some of these checking accounts offer up to 3% annual percentage yield, in contrast to savings account rates of only 0.09%. To obtain the higher interest rates, customers typically have to meet certain requirements, such as a minimum balance, establishing direct deposit or bill pay, or conducting a minimum number of monthly debit card transactions. If account holders fail to meet the requirements for receiving the higher rates, there's usually no penalty. They are simply charged the bank's standard lower rate for checking accounts. So comparing checking account activities. So this is an activity that I'd like for you guys to do. You're going to compare fees, interest, accessibility, and features. Okay, so fees, ideally look for accounts with no maintenance fee and minimal to no ATM fees or other transaction fees. Interest, the higher the interest rate, the better for checking accounts or savings accounts. And accessibility to cash. Do they provide an ATM network? Are there local branches? How easy is it to transfer to other linked accounts? And then other features like online access, mobile check deposit, bill pay, a phone app, etc. So we'll worry about this activity later. Let's carry on here and learn about the other types of ways to save at financial institutions. So this is slide 8, savings accounts. A savings account is a record of the money an individual holds in an interest-bearing deposit account at a bank. Two key features set savings accounts apart from checking accounts. These accounts generally pay a higher interest rate than checking accounts. If a checking account pays 0.01% interest per year, a savings account might pay 1% interest per year. The interest rate depends on the bank, on economic conditions, and sometimes on how much money is in the account. Also, savings accounts limit the number of certain types of transactions the account holder can perform each month because of a Federal Reserve rule called Regulation D. Limited transactions include transfer between accounts, bill payments, overdrafts, and check or debit card transactions. If you exceed the limit, the bank may charge you a fee, close your account, or convert it to a checking account. A savings account that earns a higher interest rate at higher balance levels is called a tiered rate account. You might, for example, earn 0.5% on balances of $0 to $5,000, or 1% on balances of $5,000 to $15,000, or 1.5% on balances of more than $15,000. Tiered rates reward customers who keep high savings account balances, but consumers should be careful not to keep more money than they need for a 6th-month emergency fund in their savings account. Excess funds could be earning a higher interest rate by investing in other investment products. Money market accounts. One of the simplest alternatives to depositing money in a traditional passbook savings account is to obtain a money market account. Money market accounts are insured by the Federal Deposit Insurance Corporation, the FDIC, just like regular savings or checking accounts. In addition to paying higher interest rates than standard savings accounts, money market accounts offer limited checking account services. There is usually a relatively low maximum number of checks that a customer can write on his or her account per month, typically between 5 and 10. In return for abiding by this restricted withdrawal activity, money market account holders receive a higher interest rate than those that are available for traditional savings accounts. A bank offering only 0.09% interest rate on a standard savings accounts, for example, might offer a 0.2 interest rate on a money market account. In addition to the limit on monthly transactions, money market accounts usually have other restrictions as well, such as a required minimum opening deposit amount or a minimum balance that must be maintained. If there's a minimum balance requirement and the account drops below the minimum, account holders may be paid just the standard lower interest rate offered on a regular savings account. However, some banks also charge a penalty fee. Before opening a money market or other alternative account, scrutinize the fine print of your agreement for any restrictions that apply to the account, along with all fees that the account may incur. So when you're comparing savings and money market accounts, compare minimums and restrictions, tiered interest, minimum amount required, maximum amount, limitations on withdrawals, transfers, etc. Remember, interest rate, the higher the better, and then other features. A CD, a certificate of deposit, they have a fixed rate and a fixed date of withdrawal, a maturity date. For individuals who do not expect to need access to their savings for at least a year or two, there are certificates of deposit. Term lengths are typically from 3 to 60 months. The longer the term that the customers are willing to have their money tied up, the higher the interest rate available. 1 and 2 year CDs offer higher interest rates than are currently available on traditional savings accounts. According to Bankrate.com, 0.72% was the national average annual percentage yearly rate for a 1-year CD as of September 24, 2018. 2-year CDs offered 0.94%. However, Synchrony Bank was offering 2.65% for both 2 years and 13 months with a minimum deposit of $2,000. And Marcus by Goldman Sachs was paying 2.5% for 1 year with a $500 minimum balance. With a little planning, individuals can spread their capital across CDs of varying term lengths to provide themselves with more liquidity in case they need to access part of their savings. Even better, CDs are FDIC insured. So TC's 2 cents, keep it simple. Start with one checking account and one savings account. Make sure you're receiving a good interest rate and paying no or minimal fees. And if you don't need the money in the short term, put your money in an account that earns higher interest. Only use CDs if you are positive you don't need the funds for the period. In closure, the right savings tool can help you make the most of your hard-earned savings. So let's go ahead and take a look at the 4-2 savings tools comparison exercise. And that's here. So you're going to, like I said in the video earlier in the video, and you can use the PowerPoint to help you, but you're going to compare checking accounts. Identify 4 institutions to compare: 2 banks, 1 large national commercial bank like Wells Fargo, Chase, or Bank of America, and 1 state or local bank. And then you're going to compare 2 credit unions, okay? Compare their most competitive checking account offered for an individual consumer that could likely be used by a high school or college student or young adult. Okay, so pick 2 banks. So maybe Bank of America, type that in there. The second bank, maybe do Bellevue State Bank or Fidelity Bank right here in town. We don't have any credit unions in town, but maybe see if you can find a credit union around our area, like in Dubuque or Maquoketa. And you can do that by looking it up, just Googling credit unions in Jackson County or Dubuque County. What's a minimum required amount? Remember, this is for a checking account. Okay. Most competitive checking account. Okay. They're probably going to offer several options. Just pick one at each bank. Okay. And see how well you can answer these questions. Okay. And then after all the comparisons, which account would you choose and why? Answer that question. Okay. And then you're going to move on to the next part. Similarly, compare savings accounts and or money market accounts. So you're going to identify 4 institutions to compare. Pick 2 brick and mortar banks, 1 large commercial bank, and 1 local and state bank. If you want to use the same ones that you used before, that's fine. Then you're going to choose 1 local credit union, and then you're going to choose 1 online bank that offers a high yield savings or money market account. And just Google online high yield savings or money market and see what comes up, and compare their most competitive account offered for an individual. Okay, that could be used by you, and fill this out to the best of your ability. And then which one would you choose and why? And then submit this to the assignment in our classroom.